Even well, we have had traders saying that following the uncertainty surrounding the CBN's audit of banks over in Nigeria and the increased levels of provisioning, which has led to several Nigerian banks declaring losses, investors may now be starting to believe that the worst is finally over. Many at this stage are expecting that the government's proposed establishment of an asset management company could reduce the downside risk to equities, as it would decrease pressure on the banks to sell down stocks in their margin loan book. Sanusi's latest comments have certainly encouraged optimism. Let's take a look.
At this point, let me say something off the cuff, which is not to say off the record, because it's on the record. At the last Monetary Policy Committee meeting, we disclosed that the Nigerian economy grew in the second quarter by 7.2% in real terms. It grew in the third quarter by over 7% in real terms. This was growth achieved at a time when we're auditing the banks and at a time when there is a credit squeeze. So what does that tell us? It tells us that the banks were never lending to the real sector.
Well, joining us now from our studios over in Lagos, Nigeria, is Bismarck Rewane. He's the CEO of Financial Derivatives. Thanks so much, Bismarck, for joining us this afternoon. Well, while things are seeing some stability and we get more and more sense that the worst is possibly over, the problem for the broader economy still seems to be banks' lending policies. We've had Governor Lamido Sanusi say, despite this, that they're forecasting growth at 7.2%. Do you share that sentiment?
I agree that we are going to see an upward movement in growth, but I must tell you that this 7.2% figure appears miraculous to me and the rest of the analyst community, because when we look at the constraints to growth and power, distribution network, credit, productivity, and utilities, we do not see any reduction or removal of these constraints, and also we do not see any impetus or catalyst. I must say that we were surprised at the rate, and then positively surprised. I think it sounds miraculous to us, but also we are talking about optimality. If the economy was able to achieve 7% growth rate in output without credit, then what would it have achieved if there was credit and that was properly channeled? That's the question.
One of the big concerns has been credit to the fact that interbank rates are expected to climb further as banks are still pretty reluctant to sell to peers. What do you see playing out in that space right now?
Well, if you read the Monetary Policy Communique, it says that while on one hand the banks have a lot of liquidity on their balance sheet, there is a deceleration in the money supply aggregates, which from a macro policy level is encouraging but also disturbing. It's encouraging in the sense that it keeps inflation in check, but it is disturbing in the sense that an accommodative and stimulative monetary policy, which should actually complement the fiscal stimulus of $2 billion, could run into trouble. I think the Central Bank and the Monetary Policy Committee are trying to analyze and find out exactly where the problem is. I think that by bringing down the borrowing rate from the banks by 400 basis points is to make it unattractive for the banks to place money with the Central Bank idly, but to go back into the lending mode. But I must point out that the banks are so traumatized with the events that have unfolded in the last 2 months, because most of them were caught with infractions, stock price manipulation, lending, margin loans and all of that, that the trauma, they are still suffering from the post-traumatic stress disorder. And I do not see them getting interested in lending in the near term. But I think times will change. The Bankers Committee meeting of yesterday stressed the importance of lending and stressed the importance of the banks as transmission agents in the mechanism between policy and markets.
Certainly, Bismarck, for a full recovery that has a trickle effect through to the rest of the economy, there's a lot of reliance at this stage from the investment community on investors either coming in to acquire the troubled banks. On the other hand, there's also this reliance on the successful formation of an asset management company. When do you see this realistically coming to the fore? We know that the CBN has stated that the AMC will be in place by the end of this year.
I think that, left to me, ideally the AMC should have been in place before the intervention, but the earlier the better. I think that it will be submitted to the National Assembly before the Christmas. I'm not sure that the Christmas recess will not interrupt it, but all things being equal, it should come in place by January. And I think you're going to see a very sharp recovery in stock market prices once the asset management company law is in place and the infrastructure is put in there. I have no doubts that banks, for example, are trading at 0.99 book, which means that these are bargains. The stock market is at 5 trillion naira, which is abysmally low. In fact, you know, it's so low that it's easy pickings for anybody who wants to buy. I won't be surprised in 3 months or 4 months from today that the market recovery is going to be so sharp, and the banks are going to be having write-backs because of what they claw back from the provisions they've already made. I think that's clear. But I must point out that the banks were so sick that had the intervention not taken place, there would have been a collapse. Mm-hmm. But having said that, now that the intervention has taken place, it is time to restore confidence and restore liquidity, which is what I hear the central bank governor saying. But on the other hand, I must mention the fact that the output measures and the growth rate of 7% appear miraculous to us, and we hope it is sustained.